Hi there, and welcome to the T5 show. Alright, let's go ahead and do the market study for Monday, July 16th, 2007. What I thought I'd start out looking at is a chart of the S&P 500. Now this is on a quarterly basis. So you can see here we're back to the old 99 highs, back of the glory days. So the big thing I always ask when we get here is how much strength do we have, and I use volatility to try to understand that. Down here in the, where's my mouse, here we go. Down here you can see that volatility is just picked up here slightly as we come up to these old points of resistance, and this works with support as well. I always am curious how much energy does it have, and right now it seems pretty low, and it seems like it could have the energy to take this top off. But this is a point a lot of people are watching. The Dow's already there, NASDAQ's a long ways from home. Check out the daily chart here, and you'll see we just broke through this little area of resistance. Now what this has done, the one thing a lot of people are watching and talking about out here is how there's a lack of volume on this breakout. When we jump over to the Dow, you can see a very similar thing. Now we had a little more spunk here, but nothing like we had back here. And this is kind of what I was hoping for, along with I think some other people. The NASDAQ already on a good trend. It's been on this nice run. A lot of this has to do with the semiconductors, which we'll see here in a sec. And going over here to the transports, they shot for it. They gave it a try for a new high, nothing real dramatic. And we did turn around here a little bit on the utilities. When I look at the caps here, the large caps are the only ones that really broke out of this sideways action. And again, not on a lot of spunk, unfortunately. That's the only negative really about this breakout. Mid caps still sideways right there, and the small caps sideways. Going into our commodities, oil still doing great, one of the better plays out there. We've got the bonds kind of chopping around. It did that little head fake out, but I don't know. Still going sideways, not doing too much. Here's the commodity research board. So this is all commodities, and so we've had a pretty good run up here. A lot of this has to do with gas right now. We've got gold right back to a pretty significant level, and going back here to a weekly chart, you can see gold has just been chopping around. We're right back up to resistance, so make or break time, gold. What are you going to do? The dollar continuing its slide, jumping back here to a weekly basis, you'll see we have this great little setup over here right near this old support area. That's all we're looking for. From a breadth standpoint, this is the only thing we have giving us a signal, giving us a 3-month low, and that's going to be a sell signal for the trend. Doing a quick walk through the sectors here, you'll see energy, which has been leading the way there, continues to do so. The semiconductors took a nice charge coming off this weekly chart. After it broke out of this sideways action right here, we had a nice pullback, and it has been running ever since then. This is kind of the pullback of that weekly chart you see there. Industrial still doing good, no trend change or anything here. We still have technology, and it's leading a bit, had a little double bottom type formation here and has taken off since then. Again, a lot of that has to do with the semiconductors. Here we have basic materials just breaking out of this sideways consolidation, and you'll notice here we did get a little spunk on the ETF. Now be careful about reading that volume, but it doesn't look too bad. Telecom sideways, consumer discretionary sideways. The staples, I don't know what the heck this is. We've got a high, it tried to break out and failed. We're coming right back up to this point. I'm going to call it more sideways than anything right now. Here the financial, or this is the healthcare, sorry about that. And again, we've had this breakdown. It kind of, the down move's looking a little bit in question with it coming back up to this region. So be careful about shortening this range. Here, the worst performing sector for the last little while, the financials. And again, same sort of thing. We made a nice advance down, but you'll notice we're coming right back up to this area. Would prefer to see this pullback end up more closer to this area. So again, the short in here, just be cautious, I think, right now. The final is utilities, and as we saw with the Dow Jones utilities, we're just got this little breakout right here. So the downtrend's kind of over for the time being. And all right, let's sum it up with the market grid and give it a market rating. Looking over the market grid here, you can see a lot of green there on the majors, and basically from a cap standpoint, the big one's the large caps right now. From a breadth standpoint, we only have that one sell indicator, and like I said, I like to see more than one if at all possible, but you know, with that along with the volume, puts you on guard a hair. In the commodities, pretty mixed bag there, but again, commodities are kind of doing well overall, and a lot of that has to do with the oil. We'll see if gold can't do something at the top of this range here. Browsing over the sectors, I've got them ranked by what did the best last week, and again, semis won it. All these ones outperforming are still outperforming. And the financials lagging for a while, and it's still kind of lagging here. With that much green on the board, I think I'm going to go ahead and rate this market at a 1. The one sell signal and the lack of volume, I just can't get too excited about that. So I'm going to kind of take a wait and see attitude. So be pretty defensive right now, and I'm going to give this market a rating of 1. Alright, let's go ahead here and look at some of the swing trades we currently have going on. The first swings trade we have going on today is a short in AMAG. As you can see here, this has been choppy. Took a couple of these shorts a few days ago after the big down move, and they have been chopping around ever since. Kind of with how strong the market's been, I'm kind of surprised I haven't been stopped out of all of these, but I think that kind of shows some weakness. So here's the first one, shorted on this bar under the red line. We've got our stop placed right here at the green line, and again, you see we got real close a couple times. I'll move my stop once we get down here to the initial risk point, which is this blue line. CFC kind of broke down. I was really safe on this entry here on this short. You'll see I went under this swing point right here. Have my stop really loose up above this area. Broke down pretty good, and again is kind of rebounded. We're basically sitting at flat right now. Leave that alone for the time being. Waiting for the blue line, which is off this screen right now. And Old Marble, this is the troublesome one. Kind of took this setup and we shorted it here on this first down day. Had a nice move up. What I really like about this is you'll notice this area of support here on the weekly chart that got broken, and hoping that stays as new resistance for me. As you can see, this is the one that's working out the least well for me. So from a portfolio view, later on I'll start looking at some charts and sharing some stuff, but right now don't have a lot of data collected. So I've got, 3 shorts, full exposure on each of them. I'm pretty happy for a sec, so I think I'll sit and wait. See how this market pulls back. Well, this is episode 1. Hopefully they get better from here.